What's up, everyone? Today is September 17th. It's a Friday. I wanted to go ahead and make a trade recap on today. I took one trade only. That trade was on Tesla, and it was a massive losing trade. So the reason why I want to go ahead and make this video is I want to be transparent with my trading journey, as well as to those following me. I do post a lot of winners. I did go ahead and decide to post one loser, just because, in my opinion, we learn the most from losing trades as opposed from winning trades. Um, but I'm gonna keep the video pretty straightforward. It's gonna be in three parts. First, I'm gonna go to the higher time frame, open up a blank chart, and show you exactly what I was looking on Tesla. Then I will move down to the intraday time frame, show the exact entries and exits. And then finally, and for the majority of this video, I will be going over a lot of psychological tips, not only my psychology leading up to this trade, but just general psychological tips for those still struggling. Okay, let's go ahead and start with Tesla now. I'm gonna go ahead and open a blank chart. So Tesla. So let's go ahead and remove all of this. Okay. So what's the first thing I do? I start with the daily and I go ahead and draw my zones out. Okay, so nothing on the daily. Nothing on the 4 hour. I do have 4 hour supply at right here. But keep in mind that supply is at 850, so not interested in it at the moment because it is very, very far away. Okay, I have used 3 hour supply here. I'll go ahead and show you why it's used, but for now, let me go ahead and mark it up. Okay, the reason the supply is used is because you can see that we've clearly tested this supply and rejected. Let me go to 2 hour time frame. Okay, so in my opinion, this isn't the cleanest, but I would say that we have 2 hour demand right here. Also, I am doing much better from COVID. Thank you for those asking. Still feeling a lot of the symptoms, but it is manageable. Nothing on 1 or 90. We got a 45. I think here and 30 minutes. I think here. Okay, now that I have my zones and levels drawn out, now that I have my zones drawn out, let me go ahead and draw some levels. I'm only going to show data till here because this is the only data I had going into today. So the first thing which I liked was this very, very clean wedge right here. You can clearly see that we have 3 touches, 1, 2, 3. Besides that, I liked this 762 key level. So let me go ahead and mark that. The reason why I like this level is because we've had 3 clear touches, 1, 2, 3, and we also have this wedge breakout. So now my plan going into today is to take a break of this wedge, front running the 762 key level, targeting 3 hour use supply. So now let's go down to at an intraday time frame where I can really analyze the entries and exits. Okay, so Tesla. Let me zoom into ES and NQ. Okay, so Tesla kind of opened up below the level. Then what happened is we tried getting above the level. That's where I entered 5 contracts at 3.05. We instantly failed. We chopped around for a bit. I accepted the loss at 9:45, where I exited all five contracts at a price of 1.75. Um, this blue arrow represents where I theoretically should have stopped out. I'm going to discuss this a little bit more in the psychology tips. But essentially, what happened is I did not want to accept the loss, especially with the 1.5K position size. So I held on to Tesla, hoping it would move higher. It eventually did, but in any case, Tesla could have easily reversed, and I would have been in a lot of trouble. Okay, so now going over why this was a bad trade. So for a trade to be A plus, for a trade to be the highest probability trade, it needs everything to align up. So I'll go through the confirmations which I had. We were breaking the key level. That's the most important thing. The second thing is this volume. This is very, very good. Volume is clearly greater than previous days. The third thing, and very, very important thing, is just price action in general. Are there lower wicks? Are there upper wicks leading towards the level? Um, the fourth thing, and a very, very important thing, which I have not been focusing too much on, is SPY and Q's action. And while other three confirmations did line up, SPY and Q's is the exact reason why this trade did not work out. So you can see that right off of the open, Q's had an immediate push to the downside. SPY's also did, it was a little bit not as aggressive, but Q's had an immediate push to the downside. Only for a second it had a green body. Um, so going into this trade, when I took Tesla here, I knew that Q's was very, very weak. And when something is that weak, when either SPY or Q's is super weak, and I'm trading a stock like Tesla, which is a big part of SPY and Q's, I should automatically avoid the trade. And the reason for that is the best trades are going to occur when SPY and Q's are moving in your favor. So seeing that SPY was pretty weak, seeing that Q's was also very, 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 very weak, I personally should have avoided this trade. But for some reason, I thought that Tesla would move higher despite Q's being weak. That was not the case. I have learned my lesson, and from now on, I'm only going to play things off the open when SPY and Q's show strength. So that's kind of the intraday breakdown of Tesla. Last but not least, let me check how long the video is. Okay, it's only about 8 minutes. So I'm gonna go ahead and just talk about some psychology tips. So quickly, I'm gonna explain my psychology leading up to this trade. So I've been pretty consistent for the last 2 months at least. So it makes sense why I sized up. As you trade more consistently, it makes sense to size up more. My bad. Okay, so as I was saying, as you trade more consistently, it makes sense to size up more. Um, However, when you take massive losing trades, or when you are trading based off of emotional decisions, it makes sense to size down. And this is a clear example here. Even though I did enter a bad trade, I should have stopped out when Tesla had a 5 minute candle close below this trend line. That was my stop. My stop was a 5 minute candle close below this trend line. So when this occurred, I should have stopped out here. However, I didn't. I did not want to accept the loser. And in this case, I stopped out at relatively the same price. But there are cases where this could have easily reversed and I would have been in much bigger trouble. So that's kind of the first thing. If you are trading based off of emotional decisions, or you're trading with too large size, or you took major losses, it makes sense to size down. That's why I'm going to go ahead and deposit 1K into my bank account and just trade with a little bit smaller size, so about 1K now. The second psychological tip is only trade things only trade things that are the highest probability. So what I mean by this is you want to put on trades where every single factor lines up. You want SPY and Qs to line up. You want volume to line up. You want price action to line up. You want the stock to be breaking a major technical level or inside of demand or supply. So you want almost every single factor to line up. If there is a red flag before you put on the trade, then it is best to just avoid. Um, this kind of just comes from experience. You will see that maybe out of 10 trades, if you're trading mediocre setups, 2 of the 10 might work out, but on 8 of them you will take pretty big losses, and that's why it's best to just trade very selectively. Um, so now moving into the third tip, it kind of aligns up with the second tip. You want to trade less. The reason for this is the less you trade, the more selective you trade, and the more selective you trade, the more consistently and the more consistently profitable you will be trading. So it's kind of just like a domino effect. By trading less, you're going to be more selective. You're going to be more confident in your positions. You'll be able to go in with pretty good size, and then the chance that that trade is going to work out is going to be very, very high probability. So another thing is to trade less. Dylan only took one trade this week, but netted over 5 figures. So that's kind of the goal. We want to be trading less and then be putting on good size for those trades. The last tip, and this honestly is a piece of advice, which is just kind of straightforward. Do not revenge trade or take trades with no plans at all. Um, I know a lot of people preach this, but honestly, you won't stop making this mistake until you lose enough money from it. Well, when I first started trading, a lot of people told me not to revenge trade. However, I had to lose a certain amount of money to realize that revenge trading never works. And to summarize a fourth tip, that's pretty much it. Revenge trading will never work. So no matter what type of position you are in, if you are down 1K, if you're down 10K, do not revenge trade because you're essentially going to lose more money. And yes, revenge trading may work out 1 or 2 times, but if you make it a habit, out of 10 times, revenge trading will only work once out of 10 times. But I'm going to go ahead and end the video here. I think I did a pretty good job explaining Tesla, my trade, my psychology, and then a lot of psychological tips as well. If you have any other questions, just hit me up on Discord. That's where I'm the most active, or leave a comment in the YouTube section below.